Hey guys, Ash Trades here, and in this video I'll be talking about the ICT lunch setup again, and I'll try to clarify it a bit more and show you examples of live trades, both winners and losers, so you can get more of a feel of how the strategy works. You can see here are my results. I took 20 trades and I had a 70% win rate and a P&L of 13.5% over these 20 trades, which I would say is pretty good. I use this software called Trader Edge to take my trades and kind of lock them in here. It's a really good backtesting tool, and I would highly advise you to use it. You can get a 7-day free trial if you want to. You can just use my link in the description and sign up yourself. So yeah, let's get into some of the trades and both winners and losers, so you can get a feel of how I did this. Now I have cleared the software out here, and I'll be adding the trades while we take them. So let's get into the chart and start taking some trades. The first thing you want to do is look for highs and lows to be formed between 12 and 1:30 p.m. The macro starts around 1:30, so yeah, you should be found around this area at 1:30 p.m. You could also find it before or a bit after. That's what I found out. So then after that, then you look for overall market direction. You can look for equal highs or lows or higher time frame drawn liquidity like fair value gaps. And it's important that you remember that the move at 1:30 here, it's the last move before we see the real move of the day, because the real move of the day often starts between 2 and 3 p.m. like the ICT silver bullet. This move at 1:30 p.m. you shouldn't hold it for more than 30 to 60 minutes. In my opinion, you can also hold it maybe 90 minutes. After the move has set off and liquidity has been taken, then you see the real move of the day, and it often goes in the opposite direction between 2 and 3 p.m. It was just like a bit of knowledge. So if you see the highs being swept that form between 12 and 1:30 p.m., then anticipate lower prices after a break of structure on the 1-minute time frame, and vice versa. If you see the lows being swept, then anticipate higher prices. When you see the break of structure happen, then enter off a fair value gap, order block breaker, or in a PD array if you see the break of structure. Then I often look for targets of liquidity, and I try to aim for a 2R. It doesn't really matter if it's 1.8, 1.7 or 3R, just like a reasonable target. And what I do is close half my position at 1R. You can do whatever you want, what you feel comfortable with. I just feel comfortable this way because it's you get a lot of more winners than losers, and it's better for your psychology when you trade. And then you set your stop loss to break even, so you cannot lose anything more after you've hit the 1R trade. So yeah, let's start this out. I'll delete this now. You can already do a market analysis now before we hit this area 12 to 1:30 p.m. We can see that highs have been taken out, and our next drawn liquidity could be up here, and it could also be up here. Let's just mark these out for the sake of marking them out. And we can see we have some fair value gaps as well. You can also go on the higher time frame, like the 15-minute time frame, and look for fair value gaps like this one. So these are our draws of liquidity right now, because we can see lows have been taken out already in this session. So yeah, our main focus is these highs at the moment, but let's see what market does after the lunch session has run. So yeah, let's go here. We can already see lunch session took out all these targets I had. Liquidity has been taken now. What we basically be looking for is highs and lows being swept, and then a market structure shift forming. Now we can see highs keep being taken. So if I see a break of structure to the downside now, then I will anticipate lower prices, but we still have these areas up here that hasn't been taken, so market could still reverse and go up. And now we see a market structure shift because these lows here got swept. So you can now enter a short position from a fair value gap right here, set this stop loss above here, and go for these lows here, which gives a 1.5. You could also go down here and go for a 2R. So let's see what it does. We are now filled. And as I said, we took out all these lows here, and market reversed, and we got higher prices. So this trade was a loss. Go and put 1% loss, boom, and we didn't hit the 50% mark, I think, and no, we didn't. So let's go to the next day. 12, one more. Yes, let's do our analysis again. What has happened? We have taken out all of the highs now, and we are currently in a quite a big uptrend. And let's mark out the highs. We have a high here at 930, and we have the lows down here, and we have a fair value gap down here. So let's go into the 1 minute. Let's see what market does. You can now see highs being taken again. And highs keep on being taken. So what we can expect now is lower prices, in my opinion, because we have swept all of this liquidity here. So if you see a breaker structure to the downside, even though we are in an uptrend, then I'll anticipate lower prices. And we already see a shift right here because we took out these lows here. You can also wait for more confirmation and wait for these to be taken out, but let's just put our entry right here, a short, and then go for the lows down here and a stop above here. Now we filled the fair value gap right here on the 1 minute, and we can see the bodies it respects. So yeah, it looks good. Bodies are still respecting the fair value gap, like precisely. So this looks like a trade that could go home. And boom. Then we hit a free risk to reward ratio. So let's put 3% in here. Normally I would take half off at 1 hour, but just let's do this now. It's a bit easier. So let's go to the next day. So now we have the start of the session again. What we can see has happened is like lows have been taken out early here at 9:30 again, and we've been going up since. So we're currently in an uptrend, and we can see that we have some sort of a market structure shift at the moment. But let's see what the 12 p.m. to 1:30 p.m. session brings. Oh, we can see lows being swept. We swept these lows here. So now we have our high right here, and we have our lows right here. And we have some equal lows right here, which is a huge draw on liquidity. So if these get taken out, then expect higher prices. And now we can see these are getting swept, so we expect higher prices now if we see a market structure shift. And now we kind of see a market structure shift right here. Took out these, and then put a long position right here, and we can go for this high right here. And yeah, sadly we are out. And what we can see happened here is that we've been going down since this high, lower lows and lower highs, and yeah, I think this was just a downtrend trend, and yeah, it's unfortunate. So that was a 1% loss. We had the loss here, and let's go to the next day. Let's do our analysis. What has happened today? We see this low be taken out here again around the New York Open, and we've been going higher ever since, taking out yesterday's high. So yeah, we can anticipate lower prices again. So let's see what happens. We have our high here from now on, and we have a low right here. Yes, high right here. See what market does. Now we have some equal highs right here, and if these don't get taken out, then anticipate these as like a target area for liquidity to go to. So we also have some equal lows now. So whatever gets taken out first, then I anticipate like price going the other way. We see the lows get taken out now. So yes, if we see a market structure shift or breaker structure, sorry, to the upside now, then I'll anticipate higher prices. So we have a high right here. If this gets broken, then I'm going long. And yeah, we sort of broke it now. You could also have entered from this for a better entry right here, but let's just put it up here and wait for a fair value gap to be formed. We have a fair value gap right here. Let's enter from this and see where market goes to. We can see that our risk to reward is not the best at this trade, so I would take most of my position off after these getting swept. Yeah, I'll just put it to 1 to 2 for the sake of putting it to 1 to 2. It's just easy. So let's see what happens. We get filled and prices go higher. And yes, our target was hit. This was a really nice trade and a really good example in my opinion, because yeah, it moved very cleanly. We had these equal lows taken out. We had targets of equal highs. We could target after, like the 130 macro starting right here. So we could see, yeah, it was just playing out perfectly. We took out a lot of lows and then market dropped up to the highs and went higher, and we were also in a very big uptrend. So I would say this was a really good trade. So let's put it in. And let's do the last day, the Friday, and then we have done a week. Now we're on the last day, Friday, and let's see what the market did. We can now do a pre-market analysis, drop down to the 15-minute time frame, mark out the highs and the lows. And yes, we took out these highs, and we have currently been in a downtrend. So I would say if we see some highs being taken out, then I'll expect lower prices because of the market trend. And we still have this low that is untouched, and these lows over here which are also untouched. So yeah, let's drop into the 1 minute time frame and see what happens. We now have these lows being formed right here. Could be a target of liquidity. And you can see we are currently going higher and higher. Take out this buy side liquidity right here. And we again take out some buy side liquidity over here. So yeah, what I would anticipate now is actually lower prices if we see a breaker structure to the downside. You could also argue that we could go higher because yeah, we still haven't taken this out. But because we have taken out so much liquidity in this run, I would anticipate lower prices, and because of the market structure. So let's see if we get a market structure shift or a breaker structure, and we already get it here. Right here, we took out these lows. Let's just enter from the fair value gap right here, and let's target the lows here. We only get a 1 to 4.6, which is not that good. So let's target the lows down here, which gives a 2.5. Yeah, I'm alright with that. So let's see what the market does. We are now filled, and we can see these lows be taken out already, and also have these lows over here. They are not been taken out yet. They just got taken out there. So I would take most of my positions off, maybe here, just for a safe trade and go to break even. And market consolidates a lot. Do we take out these lows down here? And yes, we took them out. Another successful trade. We got a 2.5 profit. Boom. And yeah, so these are the results of after trading for 5 days. We did the week from 12th of June to 16th of June. And I hope you learned something from this. And yeah, I know it's a bit of a strategy where you can go like either way. It's just like you have to anticipate and know the market a bit to see what direction it kind of wants to go to and where the liquidity lies. If you want to backtest yourself, I would highly advise you to go use Trader Edge or another software, because it's way easier and you can get like a better overview of your results, and it helps a lot to backtest because you get a lot of confidence in the market. So I would highly advise you to like go out and backtest yourself instead of just looking at this video. Yeah, that was all from me. I hope you learned something from this video, and if you did, please like and subscribe.